It's time for a little update on AMC and APE. Really the same thing in my mind. I'm going to talk about that because those prices really should not be different. That's sort of one issue. Last time I did a video, I was talking about the algorithms and how they were using APE to sort of discover what they were and kind of reverse engineer and all that kind of stuff. And since then, I've learned more, seen more, gotten I think a better idea of some other things in play. And I still think that they could do, part of the play with looking at the algorithms and everything, but I'm not sure that's one of the primary things right now. I think, from what I'm seeing, there's some events coming up, some dates coming up that are pretty key. And again, I'm just looking at this from a fundamental standpoint, like CFO hat. And I think that these dates and these things that are going to happen are big time catalysts that could really put pain on the short sellers and really help the shareholders of AMC. First thing I want to talk about is this craziness with AMC and APE having different price. They should not have a different price. Whether you understand everything that's going on or not, excuse me, AMC and APE should not be a different price, and in traditional sort of fundamental senses, this is where you would play a game called arbitrage, where you have two stocks that are basically worth the same, and they have, we close this little, any gap between the price is really profit because the price should be the same. So if I just took, if I was selling half shares of a stock and some half shares were on the market for less than the other half shares, you of course could buy the shares that were going for less and sell them to someone else for the people that are paying more, right? And it's just free, easy profit. The gap between AMC and APE is just, it's not explainable. I mean, these stocks go on, or these securities, let's say, go on the market, and there's a little bit of inefficiency, right? So it kind of has to work its way out, and you might have, AMC at 10 and APE at 9.50 or something like that, and it kind of works its way out, but it's been plenty of time, and there should be no difference. They should be trading at the same price, and so that's really funky. I mean, that's obvious evidence that something is really being manipulated. In fact, APE, I would say, is worth a little more than AMC. I mean, it's in first position. America declare a dividend for APE and not pay AMC. He can't do the opposite. He can't declare a dividend for AMC and not pay APE. APE is a preferred share and preferred position, right? So in my mind, it should be worth more. So maybe I wouldn't say necessarily the same. APE I could see being worth a little more than AMC, and that's certainly not what's going on right now. So, all bets are kind of off on this stuff. All fundamentals, everything is just completely broken. But let me bring you back to this. I was thinking the other day about Warren Buffett, and I've read The Intelligent Investor, and I've read a lot of things that Warren Buffett has written. I've listened to a lot of Berkshire Hathaway annual meetings. I've even been to one of them, and at one time was a shareholder in it. And he always talks about the fundamentals, and he's a value investor, but he scours for opportunities. He looks for companies that fundamentally are worth more than the stock price, right? And this is just simple math. This is like number of shares outstanding, current price, you multiply the two together, bam, you get value. Then he analyzes the company and says, okay, if I take the stock price and multiply it by the number of shares, that gives me $100 million. This company's worth $500 million. So I don't know if it's fear, I don't know if it's panic, I don't know if it's just the stupidity of the market, but this is an opportunity. And he buys big. He goes in big, right? And he knows that eventually that stock price is going to get back to equilibrium where it's going to reflect the $500 million value of the company, right? So he looks for these type of opportunities. I was thinking, why is he not doing this with AMC? Like, I'd just be surprised Because if I was using his method to look at this, I would be all over AMC. Could be lots of reasons. I mean, first of all, the guy is, he's made his money. He's kind of, I doubt that he does things as aggressive as he used to. Maybe he does. Maybe he keeps that discipline, but just human nature. I mean, is he really going to, get as aggressive as he used to? Now, the other thing is he going to get into meme stocks? I mean, he has fiduciary duty to shareholders. I mean, if anybody's ever seen that movie, The Big Short, Michael Burry, when he was making those plays on shorting the housing market, I mean, his investors were ready to crucify him because they didn't like the investment he made. It could be one of those things where, people don't understand the AMC play. It looks like a circus. It looks like a bunch of kids sitting in their pajamas trading AMC in Silicon Valley, or just a bunch of dumb college kids. Shareholders of Berkshire Hathaway are not the type of investor or shareholder that would go along with that kind of thing. So, it could be that he's not interested in it for that reason. It could be that he thinks things are so messed up and so fundamentally flawed that he has no confidence to predict that things will come back and right themselves. And I understand that. I think that's a valid point, a valid argument. So, why would he not jump? I think he would normally jump on this, but I think there's probably some reasons he's not. Now, that being said, if there was an announcement tomorrow that Berkshire Hathaway was buying 100% of AMC, it would not surprise me in the least. It would not surprise me in the least. I would say, okay, he was a circling shark. He was waiting. He jumped all over this when he had the opportunity, and he bought the whole thing, and he's got the firepower and the political clout and the cash to take these guys down. Okay. Would he do that at his age or something? I don't know. I'm not sure. Is he a conservative sort of, hey, I've kind of been there, done that, made my money? Or is he going to go out with a bang, right? This will be a way for him to go out with a bang. I don't know. Total speculation. But I wouldn't be surprised if he did. That being said, guys, I still come back to a couple things. One, if you think that the share of AMC is about priced right, I don't think it is, but let's say you do, then buying APE is a no-brainer, fundamentally. Okay, going back to just straight up academics, right? This is how great investors make money. They invest in things when the price is down because they know fundamentally it's worth more. Okay, and that fundamentals always rule the day. You have to think long, you have to be patient money. Okay, fundamentals will always. Now, if we have no law and order and we have anarchy and the government's overthrown, there's a coup, because that happens in other countries, right? We don't think about that stuff here, but it does happen, and then all bets are off. We don't really know. But APE and AMC should be the same. Okay, so APE is extremely undervalued right now just based on that. And anybody, a 6-year-old can understand that, okay? But secondly, if you look at the value of the company of AMC, I have a license in doing valuations. I do formal valuation reports of companies. Could be smaller or bigger, right? I know how to value companies. I'm looking at this thing going, okay, if you take the price of the stock and you multiply it by the outstanding shares, here's the value. But the value of the company is this, so there's a huge gap. Every price, I'm not going to quote any numbers, but the price of the stock should be this. Right, AMC stock should be this, and APE should be this. We're not even close. Okay, I'll say that. And that's just fundamentals. Now, AMC is paying off debt, generating cash. I do think they're going to raise some more capital at APE and use that to pay off more debt. The company is becoming more valuable by the day. Okay, and significantly, because once you go from being at risk of bankruptcy to basically being a healthy company, you get exponential increase in value, right? Because now if there's no bankruptcy risk, you're not going to see just the normal incremental value you would in having more earnings and more cash flow. Once that's removed off the table, you get an exponential burst of value in the company, right? So the value of AMC overall could triple, quadruple, even quintuple, okay, in a very, very short period of time, just fundamentally, right? So, I still am sort of, and I think that Adam Aaron has a ton of tools at his discretion now to really put the hurt on some of these bad actors that are short selling. We know naked short selling is going on. We know the price is being diluted by the phantom shares. I mean, what's actually going on is when we go in and we start buying APE or we start buying AMC, what they're doing is they're just creating phantom shares. Again, I'm not going to say I know this for sure. I mean, I don't want to say anything defamatory, but I mean, let me just speak freely and tell you what my opinion is. They're selling phantom shares and going into the dark pool, right? So what's happening is it's having a dilutive effect on the share price, right? So the more we buy, the more the price goes down. Totally, what's left is right and what's up is down and what's down is up, okay? When we buy more shares, the price goes down, okay? There's a dilutive effect on it, okay? Because they're issuing phantom shares. So what's going on is expected. So when you see the price go down, you know that there's a huge amount of buying going on, right? That's a good sign, okay? A lot of people want to get in. And in these shorts, we'll have to cover and deliver these shares at some point. So there's a lot of that screwy stuff going on. And I'm at the point now where I'm just like, look, I'm just going to hold. I mean, I don't know how long it's going to take. I mean, I'm 46 now. I mean, I've invested in companies for longer than 10 years, and I've had some time to kind of watch how that stuff can play out, and I've made really good money on some of that stuff. I mean, this stuff is eventually going to get back to fundamentals, right? I mean, this company is very close to being almost unbankruptable, if not there already. And they're going to start producing massive cash flows when they're diversifying, they're getting into other types of businesses and everything. So I mean, they're really on their way. I mean, Adam Ayer is leading this company, and it could be at some point pretty quickly here one of the strongest companies in the world, especially on their balance sheet. There's a bunch of debt coming due, and I think it's like November something, and it's right around the earnings call where he has some callable bonds, and he could very easily issue shares in APE and pay off those bonds and get that debt off the balance sheet. That would be a huge catalyst. But we need to wait for that date to happen. I think it's November 6th or 7th. November 8th is, of course, the earnings call. He may come out in the earnings call and say, okay, by the way, I have sold a bunch of APE, and it could be in more of an institutional private transaction at $10 a share. I have raised $4 billion, and I'm paying it out in a dividend, right? So everybody is getting $50 a share dividend. What the hell are these people issuing these phantom shares going to do? They cannot pay out that dividend. I mean, the margin calls, they're going to be busted, right? That's just one scenario he could do. So right now, I see a ton of different scenarios. I think he's got them by the you-know-what, and I think he can. He's just waiting to see kind of what their actions are, but I think he has some significant catalysts that he is waiting to happen. This callable debt's a huge event. The November 8th thing is a huge event. The issuance of APE was huge. The timing of it and how he does it, to maximize shareholder value. He's going to want to do the right things in the right sequence at the right time to really bump up shareholder value. And I'm telling you what, he is holding all the cards right now. And if I see that change, I'll do another video on this, but he can do numerous things to create pain for them and riches for us. I think he's just trying to figure out the best way to go about doing this, and also probably want to make sure that we get paid, right? Because it doesn't do any good if it can't be paid, right? So he's probably just trying to. I really do think all of his actions and everything I'm seeing him and the CFO do are just really best for the shareholder. I mean, I'm just more impressed the more I see it. But again, I used to think that the algorithms were sort of the play. I do think that's still a play, but I see more options now. He's got more options of things he can do. I personally like paying out the dividend to APE. I mean, that would be fantastic. I raise a bunch of capital through APE, and I use that money and I pay it off, and then I issue dividends to APE. And through that, I basically just putting the hurt on the shorts, like big time. Like I'm totally bankrupting them. And I'm getting all this capital paid out. It would completely expose everything, and that would just be the trigger. He may not do that though. He's got other things up his sleeve. So anyway, remember this: APE and AMC should be the same price. if you take all the shares of AMC and APE and multiply it out, there's no way it's even close to the value of the company. If somebody were to buy AMC, we're going to get a ton more for the shares than we have right now. Okay, so we're sitting pretty right now. Again, patient money. Be Warren Buffett. Think like Warren Buffett. Be patient money. You are sitting on a gold mine. Just because you don't have the tools yet to dig it out, they're on their way. Okay, just chill. All right, I would encourage anybody. I just picked up more APE shares today. I am a little pissed that I'm paying $1.90 instead of what I had paid before. You know, I bought some AMC shares at like $40, and I kind of dollar cost average on the way down. I'll admit, I am a little pissed that now I could have just picked up all the shares right now, been in the same position for a lot less money. But let's wait to see what happened. I'm not selling. I'm totally holding. You never know when this catalyst may happen, and you might not even be able to get back in. The brokers may not be able to even fill orders. So you know, to try to buy back in. So we're just going to let this thing, let this thing go. My advice is to hold. That's what I'm doing. That's the only reason I'm giving that advice. So yeah, I think that's about it. I'll do more videos as things come out, and if I think that we're in any less strong position than I just talked about, I'll talk about that as well. All right, thanks. Bye.